Hey everyone, I'm Tom Thornton with Hedge Fund Telemetry, and it is March 28th, 2022. And today we are doing our bi-monthly short interest review with Jeff Garbaz of Erlanger Research and Quantitative Partners. And it's a lot going on in this market. We've had some real big swings, and I have Jeff that will discuss this. But first of all, I just want to pop in here. This is our disclaimer. The bottom line is one should always check with your licensed financial advisor to determine suitability of any investments. And this is not a solicitation to buy or sell any particular securities. So Jeff, for those that have never been on one of our short interest webinars, why don't you run through the Erlanger types 1 through 4?
Yeah, sure. So what we do is we put stocks into one of 4 categories or in no category. So typically on any given day, maybe 40% of our stocks fit into these 4 type categorizations, sometimes a little more, sometimes a little less. The first thing we do is we look at a tech rank. And so we rank all stocks technically from 10% to 100% over the last 100 trading days. And there is a bit of a forward weight to it. Roughly call it 16 data points in the most recent 50 days, and then 4 data points between day 50 and day 100. But it works out pretty nicely. A stock doesn't go from 100 to 10 overnight very typically. It's gradual progressions up and down. So once we know that, then the next thing we do is we build a short ratio. And the short ratio is different than anyone else's short ratio you'll ever see, because New York Stock Exchange and Bloomberg just do volume as over the last 20 trading days. That is the denominator in the calculation for the short ratio. Share short is the numerator. What we do is our volume is average volume over the last 12 months. So it smooths it out nicely. And when we look at some charts today, we'll see how the short ratio really follows the absolute number of shares short. And so once we know the short ratio, then we look at the range of the short ratio historically over time. And that's what builds a short intensity rank. 100% highest, 0% the lowest. So then once we know the short ratio, the short intensity, and the tech rank, we can build type classifications. So the first one is a short squeeze. It's got a tech rank equal to or greater than 70%. Short intensity equal to or greater than 60, and at least a day and a half to cover. A type 2 is also doing well technically, but there's basically no one short the stock. Short intensity less than or equal to 30%. Short ratio 4 days less to cover. And then we look at where short selling is heavy. Type 3s, which are weak technically, so the shorts have been making money, and it's got the same short intensity and short ratio as a type 1. And then the type 4s are just weak technically as well as the type 3, but there's no one short. And in the market we've been in this first quarter, those have been pretty awesome short ideas, because what happens is as people go to cover, or excuse me, go to close positions and there's no shorts covering, they just tend to drop and drop and drop. And that's why we've had a lot of stocks that have dropped more than, say, 10% so far this year.
Okay, so let's put your screen up and we can go over some of the quick things that you've been seeing with this last report. Yep. And then we'll take some, as many as we can. We're not going to do a long webinar today. As many as we can, questions or requests for a stock symbol.
Yeah, this will be good. This is going to be me doing it live, real time, because I got home last night about 3 o'clock in the morning from Florida. So the one thing is that there was a bit of an increase in both New York and NASDAQ, and I've got some reports to get out today, but this will be good. People kind of get my first take on the data. So what I typically first do is I go look at a scan. We have these sections of chart room, custom scans, Erlanger scans. So I'm going down to Erlanger scans, and I'm going to our sector data Erlanger. And so what I like to do first is just look at like how the short interest changed. And like to my point, 2, 4, 6, 8 sectors saw a decrease, which means we have 24 sectors. So 16 sectors had an increase in short selling. Interesting, the biggest increase came from commercial services, and that is now at 54%. So one of our higher sectors. Banks went up by 5% to 43, so they're kind of average. Capital goods, people continue to press there, basically at 51%. Autos went up another 3%. They're at 58%. Yeah, high twos are still pretty decent. So these are all kind of, I'd say, average to slightly above average for like consumer services and materials. So it's interesting to see the places that people are picking on to do the shorting. And then insurance was right around 2%. Really no drops. I mean, slight covering in software down at the bottom. So what is interesting though.
One sec, Jeff. Last time you were on, you've been talking about how people were shorting energy all the way up, and it looks like it's dropped.
Yeah, it's down to it's average now. It's gone from here. Let's just take a look at it. So if I click on let's go to sector. Okay, so here we are. We can see, let's see. Here is the short rank. So it bottomed in last year, and then it started getting out of being in a low level in May, and it increased. You can see we kind of hit our peak in February, and now we're starting to come down just a little bit. Nothing really severe, but to your point, it is starting to come off a little bit. There's still a lot.
Okay.
We'll take a look at it.
Go back to the other screen, and I just want to go back and just mention one thing. Jeff, just tell everybody, when you see those blue numbers there, it's above 50%, and that is the levels where there's a lot of, or an increased amount of short interest, the highest short interest. Correct?
Yeah, don't think about our sector average short rank ever getting to 100%, because it's going to be impossible when you look at a sector to find X number of names, being at 100%. That just doesn't happen. So typically the highest you can get a sector is probably 65, and the lowest you're going to get something is like the mid 20s. So you can see diversified financials is actually very lightly shorted. It's down at 30.23%. So that is the one sector that is really lightly shorted. So and you can see the average tech rank is really struggling too. So to me, that's the one place right now where I would be thinking about short ideas, even though rates are going up. I mean, a lot of the stocks haven't been performing, I think, like people thought they would.
Right. I think it's interesting too that you have banks, technology, software, technology, semis down there as well as very low ranks, and everybody seems to want to buy those.
Yeah, and look at every single one of them. Look at their average tech rank. It's
real low.
It's dismal, and this is interesting thing to look at too. Is look at the average tech rank. There are only two sectors right now that stand out. And so understand our tech rank just a little bit into how the tech rank is built. It's looking at the relative strength against the S&P 500 over the last 100 trading days. And we all know that the S&P is down this first quarter. And so you've got roughly 20 days a month. That's 60 days. Remember, I said most of our weighting comes in the most recent 50 days. It shows you that basically every sector is underperforming a down market. Tom, that shows you how bad the first quarter has really been. That to me is like the most amazing takeaway from this, like what I'm looking at so far. I'm like, and a week ago, this had actually started to improve a bit, and now it's really lagging.
Yeah, I can't recall a time when I've seen that many under at those levels in the 40s and 30s, and some in the 20s there. That's real dismal. So Jeff, keep going. Let's
so let's just do a slight deviation from this. We'll come back to short interest because I'm not done with my comments on short interest yet. Here's sector data breadth. And this is interesting. I just wanted to see how many sectors. Yeah, this is not that great. So number of issues above the 50-day, utilities and energy, very, very high, but 2, 4, 6, 8, only 9 sectors that have more than half their names above the 50-day average. So that means that that 15 sectors have less than half their names above the 50-day moving average. And if we look at the 200-day, yeah, 200 days even worse. 2, 4, 6, 7. Only 7 sectors above their have more than half their names above the 200-day.
You know, the benefit though that the sectors have had is the 50-day moving average on everything has been dropping. So you're gonna see a higher number above the 50-day moving average, but it's still downward sloping 50-day moving average. So there's still a lot of work to do to bottom that 50-day and then, you know, hold it. That's kind of what I'm watching right now.
What I find interesting about last week was an up week, and yet we had 10 sectors that saw their names lose the 50-day moving average. I mean, pharma only dropped by 1%, but you can see capital goods, 8% of the names in capital goods fell below their 50-day moving average. So like last week was not as good as it really appeared to be potentially. Yeah. So let's go back to here. Let's look at you know, short interest and look at the squeeze potential. So what we do is we look at where the short intensity is, and then what is the true potential for names getting to be short squeezes. So still some pretty high number. I mean, really high numbers, quite honestly, all the way down to 20%, even down here. So we still have more potential, but the long squeeze isn't as high. So let's just take, let's just call it 25%. 2, 4, 6, 8, 10, 12, kind of like half the sectors above 25. And let's look at the long squeeze. Not quite as much, 2, 4, 6, 8, but only 4 above 25. So not as much long squeeze as. So there still is definitely some squeeze potential that exists in the work. Tom, what's really interesting though is a subset of this is the options rank has fallen off the cliff. We're down to basically nothing above 70.
So the options rank, Jeff, we've been going through this every webinar. We've seen really, really high put action, and that's when you see the green. It's very high put action, and that actually has been more important versus short interest, in my opinion, especially in the short term, because this is calculated daily and it captures a quicker turnaround, because short interest was taken 15 days ago. And
well, look at what just happened this last week. So that's the graph tracking it. And so like a week ago, we were at, let's see what this number was. Yeah, on the 16th isn't quite it, but it's close enough. So since mid-month, in the last 2 weeks, we've gone from 17 now down to 2 sectors. So basically, when we get to peaks, like you can see there at the December low, we got to a high level. Then the S&P, this is the S&P right here. The S&P rallied, got to a high level in here. The S&P rallied. That was like a 6% move. Got to here, had a couple-day rally in the end of February into March, and then got here again, and we've had another kind of move like we had at the end of January. So it's worked really nicely, but now I don't think you can rely on a put squeeze to get the market higher.
Yeah, that's very interesting.
So that's kind of just the quickie on what's going on in the work right now.
Well, that's good.
Let's take a look at kind of a fun thing I like to look at. Let's look at names that are heavily shorted, where the shorts traditionally get it wrong. I'd rather look at like some higher cap names, because that's the type of market we're in, where small cap isn't really participating as much. So let's take a look at some charts here. Here's ITT, which shorts traditionally get it wrong. I like this name because it's also got high options activity, just got there. So stocks come down, the shorts have continue to add. To me, this is really kind of dumb short selling, and then our history kind of validates it. I think trying to short a stock that's down this much in this type of market, you're not getting paid for, because people are starting to definitely do some bargain hunting for names. You kind of buy that idea, Tom?
Yeah, absolutely. Now, important, why don't you make that option rank a little larger, full screen? So this is something that I watch a lot, and when you see the red dots, and actually can you expand that out just a little so we can
Yeah, sure.
see some of the action?
There we go.
Okay, so this is good. Now let's just look at when you see the in the middle there, you see those red dots. That signifies heavy call buying. So they started buying calls at basically the highs, and every dip you started to see heavy put buying, and then you saw a bit of a
Counter rally.
bounce after that.
Yeah.
You know, these are short-term bounces, but that's what this market's been.
Yeah, and that's the purpose of the Erlanger option rank, is to catch a 1 to 3 week move. That's its goal. Whereas the types classification, looking at short interest, the goal is to catch a 1 to 3 month move. So
and the other thing is sometimes the put buying can be correct and the call buying can be correct, but historically when you start to see that heavy activity, you can fade those types of moves.
yeah, here's an interesting name. I know this from driving from Wisconsin to Florida for a swim meet this last week. People are on the road. Like Tom, I was amazed because we left our swim meet Saturday night and said, "Oh, let's drive like 4 or 5 hours."
Mhm.
Every hotel was completely booked. America is on vacation now. People are taking spring break, unlike anything I've ever seen. We had to like just keep calling hotels before we finally got into like a Fairfield Inn. And I mean, when I would pull into a gas station, it would be completely full. And then people are spending money in a place like Casey's too. So it's interesting that this stock is moving up and people are shorting it. I find that to be a really interesting
Well,
potential.
there's all those red dots that's call buying.
Well, that's at the low. That's kind of an opposite
Yeah.
situation, and we don't really quantify that. But I do like to see that sometimes. Like, I mean, it's ultimately another thing for us to quantify is like, hey, when a stock gets to a low, are the call buyers historically right? I mean, we have the data, so it's something to do at some point. So this is almost like the only way we really use the excess call activity is when it's at a peak to identify that, okay, things have gotten too excessive. So this is kind of interesting that as it sold off, I mean, that was almost flawless timing there. Obviously, that's something hopefully we could do down the road with the work, or someone who's a quant could take our data and go and build that themselves. But
So let's keep going, Jeff. Do a couple more, and then we'll look at the shorts that you have as well.
yeah, let's look at. So people just kind of added to CCK, which has been a good chart. So that hasn't been a great strategy here either, to short something that's moving up. I mean, something that's peaked, that's kind of rolled over. We can look at that as an idea.
Jeff, one thing that I've noticed on that one is you had higher short interest, and then you had call buying as well.
Yeah, you did. This one could be very toppy. This could definitely be an example of where it's kind of run out. So I'm not, to your point. It was just a big name, so I thought I'd take a look at it.
Okay.
Let's take a look at Target. That's kind of interesting. Nothing going on option wise, but the shorts definitely came into it this latest time, kind of right in here. And who knows? Maybe if it filled its gap, that would be kind of interesting.
Blow that one up, because that's one that I trade a lot.
Okay. Let's kind of make it a little. There we go. I mean, shorts have kind of been in it for a good period of time, but this number really took off. I mean, it's kind of interesting to me. It's now all the way up to 84% and over 40.
That was calculated. What day? Could show people on the day that was calculated. Is that on that?
That was calculated through the very end of February, to the very end of February.
Just put your cursor on that right side of what's
right there. Like right there, like as it was.
So people were increasing shorts at the exact worst time.
Yeah. So let me look at this. Let's see.
That's why I got squeezed up. They were shorting ahead of numbers, and ouch.
That was the day that they added. I mean, between the middle of the month and that very end of the month, like that very bottom day where it reversed, and put up a white candle. That was the absolute low. So it was
Put the options rank on there.
let's do it this way. Yeah, it had excess put activity at that point. I mean, it stayed below, then finally it started working its way towards the channel, and then it just blew through the channel.
But look at in that August, September, October level. You had excess put activity just pegged at the highs, and then it moved up. That's and you had call buying as it made new highs. So that's
well, and what's kind of interesting, Tom, to that point is if you're a short seller and you aren't using the Erlanger put option rank, you're playing at a disadvantage to other people that understand how to use that. I think you've done a really great job at understanding that. I've seen you do lots of covering in the last year or two of names where you're like, I'm not going to get in front of a put squeeze.
We've been putting more of the Erlanger charts on the Hedge Fund Telemetry site and notes, which has been really pretty helpful, especially ahead of earnings.
Yeah,
I mean, exactly. This is a perfect example.
So those are just a couple good examples. And Tom, to your point, just to show people, then we can do some names. This is another kind of fun screen that we put up. These are all obviously we're not in heavy earnings season right now, but these are all the earnings that are due out for the week. And you can go in and just, sort by like the short rank, or you can, when we do put in like estimates, everything else, but it is a nice summary, especially when earnings season gets really heavy. So we've got the next.
Let's just go through a couple of those. So Chewy that's kind of a stock that has been in the news with Ryan Cohen. Am I correct in that?
Yeah, I'm going to make this bigger too. Okay, there we go. That's kind of interesting to me because I know that actually shorts have not done well. They've done well in this period, so we've been tracking it through this period. But in other prior times, you can see there they came in a little bit, got squeezed. They came in there a little bit, got squeezed. But historically, and this stock hasn't been trading for a long time. But again, this is the type.
It looks like it could squeeze higher.
Oh yeah.
Why don't you look at the option rank?
Nothing. So not as good.
Yeah. We want to see that heavy green put buy. I mean, there's some there. Oh, this is Lulu.
Okay. Lulu had it. So Lulu's already had the little put squeeze off of the low. And so that's kind of done with. We know that's over. But this does not have a historically high short ratio ever, just because it's so liquid. It's more from you can see the short sellers have made money all the way down, and now it's kind of basing. Again, this is like, to me, a good example. Like if I'm a short, and let's say I had shorted it up around here, I would at least cover like half of my shares now, if not the whole thing. I kind of like it in here, like, because it's moving up, and there's just the sentiment. This is more just a sentiment play than like, oh my God, it's going to take the shorts forever to get out of it. Whereas this one, like Restoration Hardware, look at this. This is many more days, 5.49 days to cover.
Yeah, that one, that'll be interesting to see what happens. Williams-Sonoma is always a good tell ahead of Restoration Hardware because they're furniture sellers. And I'll tell you right now, being married to an interior designer, it's very hard to get product right now.
Look at that. I mean, that's down a lot too.
Yeah. Okay, the last one on this is MU. Let's look at Micron. I think this one will be very much watched. And this is one that I recently bought because I think the put activity was really strong in the lows.
Yeah, you got the put squeeze for sure. You can see like right there the puts, and then boom, it moved up into, and it's trying to get through the DMA channel. So that's definitely.
But it doesn't have a lot of short interest. The short interest isn't that high.
But here, let's look at, I mean, so the two other things we would look at from our perspective would be seasonality. Now, here's the thing. We've got 15 years of seasonality. What we do is we look at this thing here called the cycle R. That compares the oldest 7 years against the most recent 7 years. One would be a perfect correlation of the oldest 7 versus most recent. 0 would be no correlation. -1 would be an inverse. And so we're at -0.031. So we don't really want to look at seasonality, but we can do something pretty cool. We can come in here and we can optimize it and see if there's a fewer number of years. And let's see. Yeah, so it actually goes to 0.85. So we're kind of in like a flat, slightly negative period. This would be an interesting period to be a buyer of Micron, because then you get a little dip, but you're at a higher level. Another one. I mean, you could almost, from a longer term perspective, you could own it into year end. And then the one other thing, just kind of looking at your stuff, is what I call our core chart, and looking at volume. Yeah, so this is when volume hit its worst level. It's almost back to being above 0, which would be a positive, but it's moving. The slope is definitely positive, and you can see some of our other trigger indicators are moving up. So I would buy your argument. I would definitely buy your argument.
And several months back, not too long ago, you were highlighting semiconductors with the very, very low short interest across the board. So let me give you some to look at, and we can just do our speed round here. And okay. Oh, SMH, there you go.
Yep. No one short.
There's been some put activity on the downside here, and I think that's why we squeezed.
Oh, that was definitely a put squeeze. Definitely a put squeeze. Yep.
Yeah. Because you go back to September, October, there was the same type of thing.
I mean, that's basically a 10% rally. So that's good.
Yeah, I got a little of that, which was good. Okay, can we look at Nvidia? We've got some a couple more chips. This has never had high. There's no shorts here.
Yeah,
there's no shorts. Yeah. But there was some put activity, and usually you get the put activity and you get a bit of a bounce. And you can see on the option rank down there, all those red dots, a lot of call buying at the very high end, and those that didn't work.
One thing I just put in, Tom, just to see in this upper right hand, volume swing, our volume indicator. It does definitely show buying. Like people are net buyers now because it's back above 0. So that's a positive.
Yeah, I mean, I think that one of the things that's been happening overall with stuff that I'm looking at is there are real buyers in this market trying to buy, and they're dip buyers. It's not just a massive short squeeze. Okay, let's look at Qualcomm. Yeah.
It isn't a put squeeze still right now. So
yeah. Yeah, the shorts are
not as good a chart as Nvidia. Not as good a chart as Nvidia right now.
Yeah. Palantir, PLTR. And
here's one I want, because this has been in a squeeze a little bit, and now they just did some covering. You said Palantir, right?
Yeah, Palantir, but that's Broadcom on there. I like this as a long.
I like this as a potential turnaround name.
Yeah, so do I.
This is like a chart pattern. I call it my bottom fisher, where the daily and the weekly kind of catch up. The weekly and the monthly kind of catch up with each other, and then it's an interesting entry point. And Tom, over here is kind of interesting. Relative strength against the S&P, against the sector, and against the group. It looks like it's trying to break through all three of those right now. And look, the volume has just turned slightly positive after breaking down in the fall. So that's pretty interesting to see.
Yeah, so that's a positive. Let's look at Tesla. Tesla's up 7% on talk of a split.
Yeah, I mean it's not due to shorts, and the option put has played itself out. So
I think you're going to see, I mean, you're starting to see the option rank go below 50%. I think you're going to start to see those red dots show up again, because we've been seeing a lot of call buying, gamma squeezing this thing again. And
Well, look here. This is a great. Let's make this a little bigger for people to see. This is a great example. Look at that. Like, I'm gonna put it in the crosshair so people can see. There's the excess call activity. I mean, seriously, if you bought our service and all you used it for was to trade put squeezes and call squeezes and Tesla and Apple, this thing would pay for itself threefold. I think you'd agree with that, right, Tom?
yeah, and there's sometimes where you'll see the red dots are pervasive, and they were in 2020, and you had just minor pullbacks. I mean, 2020 was a year of minor pullbacks with just about everything. Okay, I've got a couple more. PayPal.
It's interesting. The short intensity has gotten up a little bit over 50%. I'd love to see people get really negative down in here on this thing. Because here's what's really interesting, Tom. Look at the seasonality. It's got a correlation of 0.74. I mean, almost the perfect point to come in from a seasonality perspective and trade it into September.
Yeah, that's when I caught off the low. Okay, and I took some gains on that. Netflix.
Kind of had the put squeeze kind of sitting there. Shorts are basically gone from it. So this to me is a horrible looking chart right now, because the relative strength is broken down against the S&P, the sector, and the group, movies and entertainment.
Square, SQ. We talked about this one when it was 100, and we said it had the potential to squeeze higher. That was a few webinars back, and it had a couple good bounces. I just got out of this one. I was long off.
Well, look, we have a nice little period in here of good seasonality before it kind of turns down here.
Mm-hmm.
So
okay, let's look at Meli. MELI.
That was a quick try, and then they gave up.
Yeah. Now you see the call buying, and you saw the call buying. Look, I mean, that's kind of how it works on these.
I mean, let's make this a little bigger for people just to see, but it got call buying there, boom, turned down, got it there, got a little bit of downside. I mean, this works pretty well. So I like that idea right now. And you got a really easy, Tom, you got a really easy stop. If it breaks back through 1250, you're out of it. But if it works, I mean, this thing could easily come back down to that 1,000 level again,
Let's look at SEA.
Really, we don't have a lot of data because it's recent. Yeah.
Okay, let's go through Roblox, RBLX.
Had the put squeeze kind of played out now.
Yeah, I'm still long this from around 40, and I was hoping we'd get a little bit more of a squeeze here. It's above the DMA channel and a couple other things that are trying to work, but it's the struggle. The struggle is real. Let's look at a bank. Let's look at Goldman Sachs. It's been a lot of put buying.
Yeah, it's just not working though. I mean,
yeah,
this is where the DMA channel is really nice because it's struggling on the daily, and so the put squeeze isn't materializing. The shorts are in it. They've been making money. Let's do another one. Let's do JP Morgan. Kind of struggling.
Yeah, it's not.
Morgan Stanley saying, I mean, what's amazing is everyone wanted to own the financials when rates went up, right? And they just aren't reacting the way you would think they should be, right?
So in the middle there, it shows that little red dot on that's the type 4. Up.
Oh, Yeah, yeah,
right there. Yeah. So that's a new type for us. So that is a
yeah.
long squeeze candidate. There's nobody short, and it is vulnerable for downside because nobody's short to cover. So let's go through. I want to look at a few energy stocks. Let's look at Exxon. I'm short for a trade.
Type 2. It could be,
Yeah.
you could give it a try. It could be worth a try.
Yeah. There's, that call buying on the option rank. That's where I shorted it the first time, and it worked out okay for a nice little trade. Let's look at SLB. Yeah, nobody's short this.
Same thing, type 2s. Just
Yeah.
remember, 2s can become 4s. And my favorite type of stocks to short are things that quit being a 2 and start moving towards a 4, but have yet to get to being a 4. So,
Yeah. Let's look at APA. Apache. I'm short this one.
oh, I love that. That looks great.
Not a lot. There's no shorts here.
Yeah.
Let's look at. I'm going through my John Deere. This one's actually been doing great.
But now,
And now we have call buying.
yeah, go call buying.
And you can see back in August there was call buying and gave it up.
Let's see how Cat
Mm.
looks. Cat looks pretty similar chart wise, but it doesn't have quite the excess call activity right now.
Yeah, there's just nobody short these. It's interesting. Let's go to Occidental. This is Warren Buffett's new. Let's buy Occidental after it goes up.
They're shorts. Man, the shorts
Yeah.
have just, they came into this thing. Look where they came into it last October. And they kind of just have been building the position, and now they've expanded it. So,
Yeah, this one I think is just overdone on the upside. I have more. Oh, Amazon.
excess calls.
Yeah.
I'm just seeing if the other FANG names have excess calls. Not really on that one. Not really on that one. Interesting. So it's kind of like, not that one's getting there for excess calls.
Yeah, I think I hear a lot of people just keep saying it's so cheap and you got to buy it. I don't know. Amazon call buying. Yeah, they're buying calls, and if you go back, you can see they buy calls at the highs and they buy puts at the lows.
When's the split hit on this thing? I know it's coming up. I know it was a ways out. Do you know?
No, I don't know. I don't know.
I wonder if they're buying the calls into the split coming up.
It's very possible. I'm just looking at my DeMarc screens for the day, see if there's anything that is interesting. Okay, Home Depot. This one is actually getting close to a 13. Oh, there's nobody short. Everybody covered.
Yeah.
And there's put buying.
Yeah.
I'm not sure if that's going to be enough.
I mean, we got a little put squeeze in there. And what I like to see is it happen and then go away. I don't like this where it just stays for extended periods of time. That gets me less enthusiastic about trying to play a put squeeze.
Let's look at Nucor, NEU. I just shorted this one last week.
And Nucor, right?
Yeah.
Okay.
I mean, there are shorts there.
Yeah.
But you got to think that the shorts have blown out of it with this last hurrah. And there's no put buying or call buying.
Yeah, I mean, all these stocks kind of look at US Steel. They look similar, right?
I mean, US Steel has 1.5 days to cover.
Look at Steel Dynamics, same thing.
Yeah. Then there's AA. I like this one. I'm short this one too. I mean, the short intensity is at 2%. One
Yeah,
day to cover.
yeah, there's no one there.
Yeah. Okay. Anybody have any more? Speak now in our questions. Okay. You know what, Jeff? Let's just cut it off here. I'm going to try and put this on the, oh, sorry, gold miners.
Okay.
A lot of call buying.
Yeah, and they're pressing their bets too.
Yeah.
So what I like to do when I see that is, so one thing that's kind of fun with our work is you can come over here and you can go to sectors, groups, members. Let's go to materials. Let's go to miners, metals and mining. So here's where we can find names that potentially people are shorting. So interesting, Freeport's a little bit above average. So just kind of pop back up.
Yeah, I see that. Can you look at AEM?
Sure. Oh, something going on there. Need to get Andy on that one. Wow, that's toppy.
Yeah, a lot of calls. Okay, now we have a couple more. SQM.
No, little pullback here on the excess calls, and then it kind of just reestablished itself. So
Right.
total type 2.
So just because someone's asking, I think he came in late, but when you see a large amount of call buying with those red dots on the option rank there, that is actually a negative sign, because that's where people are getting crowded into something, and it's usually after the big move has happened. And then when you see the green dots, that's excess put buying, and people tend to buy puts after the big move down and find out that it doesn't quite work. So let's go on to MOS, and I'm going to cut it off here because we've got work to do.
Yeah, I have a lot of work to do.
We got to get back. There's shorts here, 2.81 days to cover. Call buying.
For kicks, let's just look at another one of these fertilizer guys. I thought it was pot. What's this? Is that not the symbol for potash? Or did potash merge in with someone else? Well, you know what? When I don't know an answer to the question, what I can do is, it's kind of a cool thing with chart room, is I can come into here and I can just click on group and I can see, oh, let's go back to MOS. So if I don't know, then I can come here. Oh, so interesting. Intrepid Potash and Mosaic and this UAN, which I don't even know what that is. CVR Partners. These are the 3 short squeezes right now. And then if I just want to look at other fertilizers and sort it by market cap, then I can see what's going on. So there's that SQM that we were looking at. I mean, all these charts pretty much look the same. Although it's interesting, SMG, which is obviously more ag, retail, consumer, that's been a horrible chart.
Yeah, definitely. Okay. I'm going to do one more because I'm actually kind of interested. BABA. This one has been absolutely so brutally hard on people.
Call squeeze.
Oh. I mean, look at, you can, in that middle, it's been a type 4 where nobody's short. It's 2 days to cover. The short intensity rank has been in the yellow, and that's at 8% right now. I mean, there's no risk of a short squeeze here.
Yeah.
And you have those red dots, which signifies excess call buying. And that's maybe why it goes up and just can't get moving. So anyway, Jeff, I'm going to cut it off here. I just want to say
Great.
thank you to everyone. Thank you, Jeff. I'm sorry you got in at 3 in the morning and you did a great job. So we'll do it again in 2 weeks. And if anybody has any questions, reach out to me at info@hedgefundtelemetry.com. Jeff, my man,
Thanks.
I will talk to you.
Have a good day. Bye.
All right, man. See ya.